All right, Mark here, and welcome to another Greenbridge Investing market analysis. Today is Monday, so we're going to take a look at the week ahead. So if you're a subscriber to the YouTube channel, you should have received an email that I'm doing this stream right now. I usually don't do it this way, but I'm going to try something a little bit different today. All right, so let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, usually what I do on these is we're going to go over Bitcoin, the major markets, and select stocks. But before I get into that, real quick, since today's Monday, I want to go into the economic calendar. Okay, so we want to know what's going on this week, if there's anything that really stands out. And this is the calendar I like to use. Now keep in mind, if there's some really short, there's some changes that are up to the minute, they may not appear on this calendar. But, we have to go by what's here. So I'm looking for major reports, okay? Anything that really I should be aware of. And we have this one here, the Bank of Japan Monetary Policy, the minutes, and that's not that big of a deal. The Royal Bank of New Zealand, that can move the NZD, okay? You want to keep an eye on that. This is mostly for Forex, right? For the pound, we have the interest rate decision, and as a result, I just sent out a chart in the British pound, on that market there, and it's actually setting up for a short. And it's interesting because in 3 days, what is that? Thursday, they have their rate decision, which can completely negate that signal that's setting up right now. So that's why you want to be aware of these things. And then we have jobless claims that same day for the US, and GDP annualized. So again, with all the drama that's going on right now, these news reports may not carry the weight that they normally do, but you want to keep an eye on them, especially if you're active in the Forex markets. Okay, so with that, let's get to the charts. Bitcoin. Now look at the situation with Bitcoin. I talked about this. I actually made a video for TradingView yesterday, and I talked about the sell signal that was setting up, and it actually never triggered. The sell signal that I was talking about was based on this low right here, 5670, which is the low of this bearish pin bar. Never took it out, okay? So that sell signal never actually triggered. Now, I talked about some inflection points. I talked about 4,800 because I was assuming, well, if that sell signal triggers, where can we look for the reversal, and why should it reverse around 4,800 or 38, or actually 3,500, which is in this area here? Why should those inflection points even mean anything? And the reason is because we pushed above 64.25. We didn't close above, but the fact that we pushed means that this thing is not as bearish as everyone thinks. That's what the structure is telling us, and this is where the bears go wrong, because they're all focused on this lower high. But the reality is it should never have taken out this level if it was truly weak. That's the type of evidence I'm looking for. And now we have another higher low in place, which was established here at 57.05. So basically that 57 level held. We have that swing trade long from 57.50. So far it's hanging in there. And when you have a a higher low, typically it should lead to a higher high. We need to close above 64.25. All right, but this is again why we don't react. We said if we get the sell signal, we're not going to exit our swing trade. We're going to give the market a chance to develop a higher low, because the push of 64.25 is what opens up that possibility even more. And that's why we're open to doing that. Okay, so far so good. Higher low, we should see the higher high next. Nothing to do there but let the trade play out. All right, let's now take a look at the stock market. And with the stock market, we're going to go over here to the Qs. Hey, Michael. No, actually, good question. You said it stalls at the same area. No, because the reason is that's not the important piece of information there. The fact is 64.25, right? It should not have taken that out. If this was a weak market, and that's the point that I was making in my TradingView video, if this was a weak market, this resistance should not have been touched. It should have found a lower high, much lower, okay? And instead, it took out the level. And yeah, it pulled back, okay, but it's still fooling around the level. And that's actually a sign of strength. Remember, at resistance levels, selling usually occurs quickly, and it doesn't linger there. Okay, so yeah, now we held this 75. You want to talk about this resistance up in the 75 area here, or 70, what is that? 72 area, I'm sorry. Yeah, that's another resistance. But the thing is, we took out this, the 64 and a quarter was an important one. And now we have this bullish structure developing. And that's exactly what I want to see after taking out such a resistance level. Okay, so that's why in this situation, the resistances start to carry less weight. Okay, does that make sense? And thanks for joining me, by the way. This is going to be like like a personalized analysis just for you. Okay, so anyway, all right, so that's Bitcoin. And by the way, if you have any questions, please feel free. I'm going to jump over to the stock market now. Remember, I have to keep this video kind of brief. I don't want to go over 15 minutes. So hopefully, I can answer your questions at the same time. If not, I'll answer them in the chat room. No problem. All right, so let's take a look at the stock market because this is a tricky one. And this is what I'm going to talk about here in the podcast today. If you look at today's low, okay, on the stock, this is the NASDAQ, the Qs, which I like to look at. 66.37, right, is today's low. Now, this opened yesterday. The futures opened at limit, locked limit, which means they were locked. They were open at the lowest they could go at the open, right? That's a feature, a safety feature that they have at the exchanges. And if you looked at social media at that time, all the nonsense that was going on, all the noise and just nonsense, if you get consumed by that, you would think we were going to zero today, okay? But instead, the market actually pushed up and went to 73.31. So my point is, if you get consumed by that noise and that garbage that does not help, you would probably be getting short in this situation only to get squeezed out when this thing runs 200 or 300 points higher, in a matter of, an hour or whatever that was. So again, this wide range, it's a doji, which is a sign of indecision, but it's occurring at a low, all right? The 69.50 area is, where it's been trying to hold. We got this indecision there, and it's a wide range candle. Often, when a bottom develops, or a change, I shouldn't say a bottom, but a change in momentum or change in order flow, when you get something like that, it usually begins with a wide range a lot of times. Okay, and this is like 1,000-point range in the Qs, which is very dramatic. So we have to see how this unfolds. But I like to see indecision here. It's better than pushing lows. The key is, how does this market close? Okay, we have less than an hour, so I'm going to guess that we're going to close at least with the doji, which is fine. That's a good start. That means maybe we'll have some stability this week, and it will begin the bottoming process, which doesn't seem to have begun just yet. All right, so those are the cues. Now, again, for buying stocks in this situation, we bought a bunch of stocks going into these lows. You can't keep putting on more and more and more. Now that we have some exposure, we have to wait for the market to prove stability. All right, and it hasn't exactly done that yet. It's trying, but remember, we're going to see it in the order flow first. We're not going to see it in the news. All right, so let's go now take a look at the DAX very quickly here. So let me see here. Where's my DAX chart? Let me go to the DAX. So yeah, we're doing our podcast, by the way. I'm going to be hosting it, and we're not going to stream it here on YouTube. That's why I figured I'd stream this instead, give you guys a chance to hear something in real time and see it on YouTube with the charts. Now, look, the DAX is going to be a similar situation. I don't care what kind of candles show up here on this DAX. If the S&P and the Dow do not reverse, this is not going to reverse either. And that's what you have to keep in mind for those of you that are in the Eurozone. Okay, so you may see some sort of signal, but it needs to coincide with the S&P, all right, because they're not going to move apart from each other. So I would expect that, this is a nice little inside bar. Okay, that's cool. But this is actually setting up for a short if I looked at this chart alone. So we have to see. Again, I'm looking for leadership from the S&P, not from this market. If the S&P turns and we get some sort of stability or some sort of recovery, you'll see it here as well. Not a bad place to take small bites of European denominated assets, but again, they have to be small. Because if this market pushes its supports and continues lower, you don't want to be exposed too much. You'll get margined out of your positions. Okay. So that's the DAX. Michael, any questions about it before I move on to the next thing here? So for those of you that may be watching the replay of this, I'm streaming this live on YouTube today, which is, I usually don't do it normally like this, but when I do it, if you're a subscriber to the YouTube channel, you should get an email with the link. All right, so let's jump into oil here. Okay, let's take a look at oil. And oil has been, to me, something that's sort of leading the way here. Whatever oil does, it seems the market kind of responds. Now, maybe it's the other way around, but look at oil today. All right, this is the WTI CO USD, which is a CFD of oil. Look at this pin bar. That's nice, especially off of this double bottom area here, which is what price? $20 or 20 and a half? That's a pretty low point for oil. How much lower is oil gonna go, right? I mean, these are great buying prices for oil. It's just it needs to stabilize. This could be the beginning right here. Again, we need this to close, and we need this high to get taken out, which is what, what's the high here? 23 and a half. So we need to see like the 23.85, 24 area, and we may have our reversal in play, which in that scenario, I would expect the stock market to be responding well to something like that, and I'd be expecting to see a bounce there also. So keep an eye on this chart. As far as calling something like this for a swing trade, I would wait because we can't get into everything, right? And I don't want to get overexposed with trades as well. So like I was looking at the pound, which we're going to look at here in a moment, but it's either like we're going to do the pound or we're going to do oil. I'm not going to send out both because, again, I don't want to overwhelm people. There's too much going on and things can turn very quickly the wrong way, right? So again, we don't want to take too much risk in such a random environment. All right, so this is oil. Again, you can use this as a gauge for the rest of the market, all right, in a sense. So let's see how this performs for the rest of the week. I'm anticipating a bounce. All right, now let's take a look at gold really quick because gold's another one. Now gold is crazy today. Look at gold, right? So I talked about gold in my video, I believe it was on Wednesday or on Friday, and I talked about the possible pin bar that was developing here, and we never got the pin bar. It closed weak, okay? But then we got the outside bar, and now here we are. Right? And this is what the kind of action I'm looking for in the Qs. Same type of action. Now, it's not, now gold is starting to make sense, right? Everyone's putting their money into gold. For what? I don't care why. I'm just looking at the chart, right? I'm not going to get political here. I'm not going to get all dramatic like all this stuff. You can go to Twitter if you want drama. But I do see that, money is flowing back into this. Do we chase after this thing now? No, we have to step aside. If gold is going to have a nice recovery and if gold is really going to go somewhere, it'll give us an opportunity to get back into this thing. Perhaps we'll get a continuation pattern along the way. Maybe we'll get a small pullback first. That's what I want to see in something like gold, the higher low, because this can easily turn into a lower high at this point. So I wouldn't short gold. I wouldn't go long gold. I would just wait for stability. Okay, and in this case, because of this sharp movement, right, we get that higher low, I would actually be more open for the swing trade long after that structure is in place. All right, that makes sense. So that's the thing. This, by the way, is at a resistance. It was this old support that was established back here, which is what, 1558, and now that's a resistance. So again, not the place to buy gold. Hey, Alice. Oh, that's weird. I mean, that's YouTube. They should have sent you an email. So maybe your notifications are turned off or something. But thank you for joining me, though. So anyway, so that's gold. All right, so I'm going to move on from here. We're not going to do anything with gold until we see some sort of continuation pattern. Because again, when these things are all over the place like this, you're just asking for trouble. All right, we want stability. We want to be able to see what we're doing so that we can take risks that make sense. All right, let's take a look at the pound. Okay, now the pound I'm very interested in as a possible swing trade short. Why? Well, look at this price action. For one, it's extremely bearish. So this is a huge move in the pound. Now, I just went over the economic calendar and we saw that they're having their interest rate decision on Thursday, right? So in all this mess, you get this outside bar, which could be a sign of positive, a sign of bullish reversal, right? Followed by this inside bar, which is today's bar. In this type of situation, following such structure, okay, following such structure, this is shaping up for a sell signal. This is a potential short trigger setting up here, and the trigger would be around 14.45 around there. So I'd give it a little more room, perhaps 14.25, somewhere around there. So like I was just telling Michael here, Alice, if we're going to do something, it's either going to be one or the other. We were looking at a possible long in oil, the oil CFD, or a possible short in the pound. I'm not going to do both. It's going to be one or the other. Okay, so we're going to keep an eye on that, but I like this setup. And, you know, the New Zealand is also developing like this. The Aussie is also developing like this. So this is obviously a dollar movement that we're seeing. You know, this is something that's developing in the US dollar. And if this thing continues, this may be a nice short. The thing is, these bars are very wide. So the risk is going to be greater, and we're going to have to use 1% in order to compensate for that, because this thing's going to have like a 120 pip stop or something like that, okay, which is very wide, you know, for these markets. So we'll keep an eye on that. Now, let's jump over to the one stock I want to look at today. A lot of these stocks are in similar situations, plus I'm going to go over more stocks in the podcast, which I have to set up for here in a moment. So let's take a look at ROKU. All right, now ROKU, the reason why I'm bringing that one up is because it's, first of all, it's very green today. And I took a quick look at the chart, and this is what I want to talk about on ROKU. You can't get sucked into situations like this. All right, you can see the lines on my chart. This was a previous swing trade that we sent out, a couple of weeks ago, and it got stopped out. And it's a good thing we had the stop in place, for one, because otherwise you'd be stuck in it for all of this pain. And now you see this recovery. And this is a common mistake that I see all the time is, oh, this thing's, it's good now, it's strong, it's going to go higher, and blah, 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 it's ahead of the market, this and that. But this can easily turn into a lower high. And that's what I don't like about these situations. When they just go in a straight line like this, it's very hard to get involved. I want to see a continuation pattern. We had an inside bar back here, but we're not going to take something like that in this environment because things are too wild right now. Okay, so this one just happened to work out. You know how many other stocks were in this same situation that did not work out like this? So I want you to keep this on your radar, because here's what I would like to see, you know, for something like ROKU and other stocks that it could be in a similar situation, is the higher low. Okay, so that can take ROKU back to maybe the mid 60s, high 60s, somewhere around there. The higher low. If we can get that followed by one in the stock market, that would be a signal. We can take that as a swing trade. That could be a time to pick up some shares if we want to hold on for the long term. So again, you know, ROKU is one of these stocks that, you know, it's one of these high growth stocks and it doesn't pay dividend or any of that kind of stuff. So it's probably not the best long-term investment. But, you know, if the market recovers, you know, again, it's ROKU. And this thing was at some crazy prices before. Plus, if everyone has to stay inside, they're going to be watching their TV, right? Whatever, if you want to apply some logic to it. But again, don't get sucked into this type of price action. Wait for a continuation, because we can't measure risk from something like this. If you buy this right now, your risk is the low. And that's too much. At least for us, it's too much. That's what I wanted to point out here. It's more of like an educational lesson. All right, so, okay, great, Michael, no problem. That's what these analysis videos are for. You know, to provide some insight and to give you a sense of, you know, how to interpret some of this stuff. All right. Yeah, there's no hurry. There's going to be plenty of opportunities to get into these things. It's not going to be like there's going to be one V bottom and that's it. We miss everything. Okay. All right, Alice, since you made the effort to come and check this out, I'm going to pull up the chart even though I'm running out of time. Wow, what a mess. Okay, take a look at this. All right, this is a good stock, obviously. Right, and I know they have great fundamentals in the long run. I know they've had some problems recently, but here's the thing. Right now, Alice, there's no structure. So I would hold off on this until this thing develops some kind of stability. If you step in now, I mean, you may be thinking, how much lower can this thing go? What, are they going to go out of business? No, but you could take some pain. I mean, we're at, what, 110 right now? You have to be prepared for, you know, $10, $15, $20 of pain at this point because there's no structure. We need this thing to stabilize, okay? Stabilization begins with a pin bar, an outside bar of some kind. It's got to do something, just like maybe like that ROKU. It needs to bounce a bit and then give us a higher low or double bottom, something along those lines. Otherwise, I would hold off, especially in this highly dramatic and random environment. Okay, so that's it. I'm going to wrap it up there. I got to do the podcast next. So you guys check out the podcast. That's fine, Alice. If you can handle the pain, if you don't mind sitting through the pain, and because of the lack of structure, and then you can add more on the way back up, that's fine too. It's just you have to understand the risk that you're taking. That's all. I mean, it's a good stock. You know, this company is not going out of business anytime soon. It's not, you know, it's not CGC. So anyway, all right. So again, guys, I'm gonna jump into the podcast here in about a half hour, so you guys can listen to that. We're not going to stream it on YouTube. That's going to be just on the radio station there. All right. So again, thanks for joining me today, you guys, and I'll see you guys in the chat room. All right. I'm gonna stop this stream now. Have a great day. I'll talk to you then. Bye.